Welcome to the world of investing. If you want to make your money work for you in the UK, you're in the right place. But here's the thing, the key to growing your wealth isn't just about saving your money, it's about investing it wisely. Today, we're diving into 7 smart ways to invest your money for long-term wealth. Whether you're just starting out or you're a seasoned investor, there's something in here for you. Here's a fun fact. Did you know that £1 invested in the UK stock market 30 years ago could have grown into over £70 today, even after accounting for inflation? That's the power of smart investing, and we're going to show you how to unlock that potential for yourself. Before we dive in, don't forget to hit that like button, subscribe, and turn on notifications, because we've got a ton of amazing content coming your way to help you grow your wealth. 1. Stock market investing. First up, the stock market. For many people, the stock market is where the magic happens. When you invest in stocks, you're buying a small piece of companies, from well-established giants like Tesco and Barclays to growing innovators. Historically, the UK stock market, especially the FTSE 100, has returned around 7 to 8% annually over the long term, which, over decades, can compound into some serious wealth. So, how can you invest in the stock market? Let's break it down. You can buy individual stocks, which means owning a small part of big companies. For example, by owning shares in BP or Royal Dutch Shell, you could potentially benefit from both the company's growth and dividends. If picking individual stocks sounds like too much work, there's a smarter, easier way: index funds and ETFs. These are investment products that track the performance of a group of companies, like the FTSE 100 or FTSE 250. They're a low-cost, low-maintenance way to invest in the entire market, and over time, they have historically outperformed most individual stock picks. And then there are dividend stocks. These are companies that regularly pay out a portion of their profits to shareholders. If you hold dividend stocks, you can reinvest that money or use it as passive income. Companies like National Grid and Royal Dutch Shell are well known for their reliable dividend payments. Here's a simple but powerful tip. If you invested just £500 a month in a low-cost UK index fund like the Vanguard FTSE All-Share ETF, that could grow to over £500,000 in 30 years. That's the magic of compound interest working for you. 2. Real estate investing. Next, let's talk about real estate, one of the most tried and true ways to build wealth in the UK. Real estate offers a unique combination of potential price appreciation and rental income. While property prices can go up and down in the short term, over the long term, real estate tends to increase in value. One popular way to invest in real estate is through buy-to-let properties, where you purchase a property and rent it out to tenants. Over time, your property can appreciate in value, while the rental income provides a steady cash flow. Think about areas like London or Manchester, where demand for rental properties remains high. Another strategy is property flipping. This involves buying a property that's undervalued, renovating it, and selling it for a profit. If done correctly, property flipping can yield great returns. However, it requires careful planning and knowledge of the local market. For a hands-off approach, real estate investment trusts, REITs, allow you to invest in real estate without owning physical property. REITs are companies that own, operate, or finance income-producing real estate, and you can invest in them through the stock market, which is much more accessible than owning property direct. 3. Pension accounts, SIP and workplace pensions. Let's switch gears to pensions, one of the most powerful tools for long-term wealth in the UK. Pensions come with a huge advantage: tax relief. This means the government helps you save for retirement by giving you back part of the taxes you would have paid. The most common types of pensions in the UK are workplace pensions, where your employer contributes to your pension along with your own contributions, and self-invested personal pensions, SIPs. SIPs allow you to take control of your retirement by choosing your investments, stocks, bonds, and even property, all in one place. A key benefit of pensions is that the earlier you contribute, the more you benefit from compound growth. Compound growth happens when your returns start generating their own returns, making your money grow exponentially over time. And don't forget, if you're a basic rate taxpayer, for every £1 you contribute, the government adds an extra 25p to your pension pot. For example, a £1,000 contribution only costs you £800. So, make sure you take full advantage of your workplace pension, and consider opening a SIP to give your retirement savings an even bigger boost. 4. Bonds and fixed income investments. For those who prefer a more stable, less risky investment, bonds can be a great choice. When you buy a bond, You're essentially lending money to a government or company in exchange for regular interest payments, with the promise that you'll get your original investment back at the end of the bond's term. In the UK, government bonds, known as gilts, are considered one of the safest investments. They provide a stable return, especially for those looking to preserve capital while generating passive income. Alternatively, corporate bonds are issued by companies. They tend to offer higher returns than government bonds, but they come with more risk because the company could default. However, investing in bonds can help you balance your portfolio and reduce overall risk. And don't forget about municipal bonds, bonds issued by local governments. These can offer tax-free income, making them an attractive option for higher-rate taxpayers. Remember, bonds may not offer the same returns as stocks, but they can help stabilize your portfolio, especially when stock markets are volatile. 5. Investing in startups and businesses. If you're looking for high returns and you're willing to take on some risk, investing in startups could be for you. The UK is home to a thriving startup scene, from tech giants like Revolut and Monzo, to revolutionary disruptors in other industries. The growth potential of these companies can be massive, but investing in them is also risky. There are a few ways to invest in startups. You can start by angel investing, which involves providing seed funding for early-stage businesses. Or, if you don't have the capital to make large investments, platforms like Seeds and Crowdcube allow you to invest in startups with just a small amount of money. One of the great things about investing in startups is the potential for outsized returns. For example, Monzo, a UK-based challenger bank, started as a small startup and is now valued at over £1 billion. Of course, investing in startups comes with risks. Many businesses don't make it, so it's important to diversify your startup investments. Consider putting money into several startups rather than just one. 6. Commodities and precious metals. Let's talk about commodities, assets like gold, silver, oil, and natural gas. These have been used as stores of value for centuries and can be great hedges against inflation or economic instability. Among all commodities, gold is probably the most well-known. When stock markets are volatile, or when inflation is high, people often turn to gold as a safe haven. It doesn't generate income, but its value tends to hold up well in times of crisis. You can invest in gold in a few different ways. Some people buy physical gold, like coins or bars, while others invest in gold-backed ETFs or gold leases, which are tax-efficient investment vehicles for buying gold in the UK. Silver is another popular commodity investment, though its price tends to be more volatile than gold. Other commodities, like oil, can be accessed through ETFs or mutual funds, but they carry higher risk. 7. Investing in yourself. Finally, one of the best investments you can make is in yourself. That's right, building your knowledge and skills can pay off in ways no stock or property can. Whether it's learning a new skill through online courses on platforms like Coursera or LinkedIn Learning, or attending networking events to connect with industry leaders, investing in your personal growth can dramatically increase your earning potential. For example, studies have shown that learning new skills, such as coding or digital marketing, can lead to salary increases of 10% or more. Reading books like Rich Dad Poor Dad or The Intelligent Investor can give you a deeper understanding of personal finance, making you a better investor. So, don't forget to invest in your future by expanding your knowledge and network. The more you learn, the more opportunities you create for yourself. Welcome to Bonbon Legacy, where money meets mindset and meaning, the key things you need to thrive in life. If you found this video helpful, don't forget to smash that like button and subscribe. Your support helps us bring you more top-tier investing content. Thanks for being a part of our journey.